800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Did you know that 55% of working Americans would choose a lower-paying job to work under a leader who inspires their brilliance? In today's fast-paced world, resilience isn't just a trait, it's a superpower. If you're feeling overwhelmed by life's pace with hurry and worry, struggling to find a way, discover the secret with Simon T. Bailey's bestseller, Resilience at Work: How to Coach Yourself into a Thriving Future. Get your copy today on Amazon and unlock your full potential.
You're locked into Money Matters Radio, 1120 AM WBNW. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News & World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education. It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off another week here on the Financial Exchange. It's Chuck, Mike, and Tucker with you. And we've got a busy week full of economic data. We're all the way through earnings season. There's a handful of companies left to report, so not much on that front. But from an economic data standpoint, on Tuesday, we're going to get the job opening and labor turnover survey report, the JOLTS report. That comes out at 9 a.m. tomorrow. Actually, 10 a.m. Sorry, my calendar did not adjust for daylight savings time yet, so I hope all of you that are working on, springing forward, that you got a little pep in your step today.
Because we'll be talking about that, too.
Yeah, let me tell you, my step is pepping. I got to say that. Wednesday, we're going to be getting inflation data. The CPI is out at 8:30 a.m. We're also on Thursday going to be getting the producer price index, the PPI data, and weekly jobless claims. And then on Friday, we get consumer sentiment out of the University of Michigan. So pretty much every day but today, we've got some major economic data. And today, what we have so far is just a continued nice, steady, orderly puke of markets at this point, with what I will say is, at least to the downside here, kind of the first potential break to the downside that we've seen out of the range that we've been in since early November. So we'll see where this market ends up going. But ultimately, the question that I've heard in the last 24 hours now, there was an interview with President Trump on Fox News yesterday morning, and he was asked, hey, are you expecting a recession this year? And he basically did not say no, is the short of it. His quote is, I hate to predict things like that. There's a period of transition because what we're doing is very big. And so I think that, look, I think it's actually a pretty fair statement by him in that, hey, the Trump administration is trying to effectively overhaul the U.S. economy in a really substantial way. And what's going to determine whether or not they're successful, in my opinion, is not whether or not the economy slows down in the short term. I think it's probably going to, and I'll get into my reasons why for that in a bit. But rather, the two questions that you need to ask, how deep does that slowdown get? And then how quick is the economic growth on the back end of it? And those are going to be the things that ultimately determine whether or not they are successful at this.
So, Chuck, I found it incredibly telling because it is, to your point, I think both an accurate and honest assessment of the economy. And to some degree, you wish politicians would be this honest more frequently, right? Like, I think about the last few years of messaging from the Biden White House on the state of the economy and basically getting out there and disregarding, I think, a lot of the polling that Americans were stating about their feelings on the economy and inflation and pricing, and that did not go terribly well. That having been said, I don't know a lot. I can't think of, for instance, in my adult memory, a president coming out there being asked about weakness in the economy and not trying to spin the question. Right, not trying to say, right, hey, yeah, we might be facing some form of downturn, but I have confidence that tax cuts, or if it gets that way, the Federal Reserve will lower interest rates, or I will put pressure on Congress to pass a stimulus bill or lower taxes, or do any of those things that you would expect an administration to respond to an economic downturn with. Instead saying, yeah, I'm not really sure, and we kind of anticipated this sort of turmoil to get where we're going. It is very honest, but very surprising to hear from a sitting president. And so let's enter some facts into evidence. I'll put on my lawyer hat, which I generally try not to wear because, well, I'm not a lawyer, but I like the way they build arguments. And so that's what I'm going to do here. Let's enter a couple things into evidence. First, the reason that companies and large portions of the United States have enjoyed and benefited from globalization is because of lower costs. Yes. Go look at the price of a TV 30 years from now compared to today, and we don't need to explain a lot more. But that has played out everywhere across food supply chains and every other area out there. The reason that companies send their production elsewhere is because it's cheaper for them to do so, and that allows them to do two things. Number one, expand their margins. Number two, sell those goods more cheaply then. So that is first and foremost what you see. So number one, if you're talking about bringing production back into the United States, ultimately it is an absolute certainty. An absolute certainty. And Mike, I'm not certain of too much in life. Maybe a few things on a daily basis. That's about it. It is an absolute certainty that if you are bringing production back to the United States that you had previously offshored, it's going to be more expensive. Because otherwise you wouldn't have offshored it. Agreed. It's easier to make stuff here and not have to deal with logistics and potential currencies and this. It's the reason that you do it is because it's cheaper. So, and by the way, no one in this administration is denying that. Scott Bessent just last week acknowledged. You can't deny it because it would be fundamentally unserious. Scott Bessent last week acknowledged that, hey, the American dream is not built on the idea of being able to buy cheap goods. That was specifically speaking to the fact that, yeah, if you try and manufacture a bunch of stuff in the United States, no matter where you were doing it previously, it'll be more expensive to do it just here. Part number two, when you're talking about imposing tariffs, whether it is on China, Canada, Mexico, the European Union, whoever it might be, that is raising costs as well. Sure. Hard stop. Yep. Whether borne entirely by the consumer, in part by the consumer, in part by the manufacturer or importer, up for debate, but higher prices, yes. Number three, if you are talking about widespread deportations of people that are not legal immigrants in the United States, you are reducing the labor force in the United States. Mm-hmm. Because the vast majority of those people are working. They are often working under the table in jobs where they can be paid, in cash and things like that, and oftentimes in jobs that a lot of Americans probably wouldn't do for the wages that are available. And that is something where you're talking about, again, if you look at where GDP growth comes from, it's a function of two things. How many hours does the population work? And how productive are they during those hours? If you're reducing the labor force, you are reducing the number of hours worked. As such, it's going to be a drag on growth. Now, ultimately, what you are trying to get to if you are President Trump and his team is something where you say, look, I want to resolve these imbalances so that the average American can have a better platform for growth for the long run. So the fourth piece that I'll enter into evidence is kind of one of these long-run things that's out there, which is the United States is running 7% annual deficits at a time when unemployment is 4%. That is not sustainable.
that can be more up for debate because there's really no clear, there's no like hard and fast rule when it comes to exactly what level of debt or deficit, annually or in totality is sustainable or not.
And to be fair, like every previous understanding of what was sustainable has been stretched and just expanded, right? If you had told somebody where deficits would have gotten to back in the 1970s, by the 1990s, they would have told you that it's completely unsustainable. And likewise, if you told somebody from the 90s where we'd be by 2020, they would say that's crazy.
But we're in unprecedented territory right now. Like,
agreed.
It's like
completely agreed.
Like everything's sustainable until it's not. And one of the lessons that, and this comes from NASA, when the Challenger space shuttle exploded. The reason why, yes, it was a failure in an O-ring, but the reason why was that they launched the thing with temperatures way too cold. And the reason why they did that is because they had kind of kept moving the goalposts and they saw no problems, and so they said, okay, maybe we can go a little bit further, and eventually they couldn't. And so it was one of those situations where everything was fine until it very much was not. When you look at deficits, again, there's been this, okay, we can stretch it a little further, we can stretch it further, but eventually you get to a point where you're like, no, you really can't. So where that point is, we don't know until we get there. And so ultimately, if the federal government is saying, hey, we want to reduce government spending, that is going to be government spending, whether you think it's efficient or inefficient, it is going into the economy and producing demand. If you reduce that demand and suck it out of the economy, it's tough to say that that is going to help growth. So you got four key areas where you're sitting there and you're saying, these are things that potentially raise prices and slow demand in the short term. Which brings us to, again, those $2 trillion questions, which are, hey, can you slow demand in a way where it doesn't get so bad that you have, a recession? Because quite honestly, I think a lot of us have forgotten how bad recessions are. We haven't had a real one in, 17 years now.
Yep.
The 2021 was induced by our behavior from, kind of the top down, and ultimately was, resolved pretty quickly. The last real recession we had was 16, 17 years ago, so we haven't gone through one in very long. In a long time, actually. And it's something where, hey, can you avoid it? Or at least if you do experience one, can it be, relatively short and shallow? And the second piece there is then, okay, how do you grow on the back end of that recession or slowdown? What do you do on that front? So I think this is the bet that the Trump administration is making. I have no idea if they're going to be successful or not. They may not. I'm not going to preemptively punish them for something that hasn't happened yet. I'm not going to be the boy who cried recession. If it does happen, okay, like, how are you going to actually deal with it, and how do you get out of it, and how do you manage your way through, and what do you look like on the back end of that is going to be the question. But we're not there yet, and that's something that I keep coming back to because I am a follower of the data. There's things out there that's concerning, but you have to see how it develops because you just don't know, and we've seen plenty of these instances the last few years where everyone wanted to cry recession, and it never happened. And I'm not going to cry recession if we don't see the data suggesting it. What else we got, Mike?
We've got a Monday morning acquisition to talk about. Actually,
ooh, that's fun.
Across. So we'll be covering that and a whole lot more, but really much more on this recession concern, how the Fed's likely to respond, and economy talk as markets are once again selling off as we head into a new week. Quick break. We'll be right back with that next.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in Elder Law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing and Dolan. Cushing and Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In today's economic climate, managing your finances can be a full-time job. This is Mike Armstrong from the Armstrong Advisory Group, and our experienced team of advisors understands the challenges that exist and the questions you may have when it comes to your own financial strategy. Our new guide is called What Can a Financial Advisor Do for Me? In it, we'll help you find answers to some of those questions. At Armstrong Advisory, we can provide you with information that may help you with decisions about your investments. Our team can also advise you of the need to work with a professional in other areas, such as taxes, estate planning, or insurance. Understanding the role these elements play in a well-rounded financial plan is extremely important. Give the Armstrong Advisory Group a call at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and if you act now, you can take advantage of a special promotion to St. Croix. Experience a vibe like no other and get a $250 per person airline credit when you book a minimum 5-night stay at participating hotels. Go to visitusvi.com and use code VIBE2025 to reserve your trip today. Take your next vacation to St. Croix in America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com and use code VIBE2025 to book your trip. That's visitusvi.com and code VIBE2025.
Hey, Chuck.
Yeah?
We just spent the last segment talking about how, policies that we've been looking at could drive up prices. We didn't spend a lot of time talking about why markets are responding to what seems to be a recession scare here. And that's, I think that's very clearly what we're getting. We had the NASDAQ just a second ago down more than 3%. The S&P right now off 1 3/4. You've had 10-year Treasury yield drop. No real talk of a rate hike with response to higher prices. So where does this all come back to? Why is everyone spooked about recession in particular? Because like you just said, I think we're talking about potential deportations, tariffs, deglobalization. All of those I can see very clearly how they correlate to potentially higher prices in the future. But as far as I can tell, that's not seemingly what markets are scared about right now.
No, I mean, look, I'll be completely honest. If I look at what's moving in this market today, the biggest players that are moving down, it's big tech, it's Mag 7.
Yeah.
And after that, the only thing in the market that is pointing to recession right now is that financials for the last week and a half have gotten absolutely whacked. It's basically like Jamie Dimon's woken up every morning, looked at JP Morgan stock, and just been like, pull the covers back over my head and get back to bed. Like it's so if you do want a sign that this market is starting to price in something recessionary, financials are getting absolutely bodied every day. It's just like over and over you're seeing it right now. But aside from that, like you take a look at it, and some of the stuff, a lot of this that you're seeing in markets is not necessarily, hey, recession is coming, but much more these valuations got absolutely out of line, and now we just need to adjust them. We've talked about Mag 7, but I want to spend some time on boring old consumer staples. Boring old consumer staples. And I want to talk to you a little bit. We touched on this last week, but Walmart and Costco, their valuations now on a forward earnings basis are higher than NVIDIA's. Now, look, as I said on Friday, I love, big slabs of meat as much as anyone else, but there's no reason why Costco should be trading like at a valuation premium to an AI stock.
I don't know, man. You ever been there at like 11 a.m. on a Saturday?
I have. Well, actually, I haven't been to a Costco just because I'm a BJ's member, but I drive by the lot, and I'm like, yep, it's like there's a line out the door. So here's what's happened in the last 1 week. Is Walmart's down 9.6%, Costco's down 10.85%. So generally you look at it and you're like, okay, big consumer staple stocks, they don't usually get whacked heading into recession. Usually they pick up some gains, actually. Like that's where people go when they're nervous.
At least relative gains to the market.
Or actual gains, because here's where I'm going with this. Procter & Gamble is up 1.33% during that time. Clorox up 6.7%. Kimberly-Clark up 3.2%. Kenvue up 0.8%. I don't know what EL is. Estee Lauder, okay, fine. They're up 5.42%. Let's see. Again, sticking with consumer staples. General Mills up 6.11%. Kraft Heinz up 4.73%. Conagra Foods up 7.95%. Some of what you are seeing in this market right now is either just rotations out of overvalued stuff, or even within a sector, rotations from the overvalued to undervalued parts of it.
Yep.
It's not like consumer defensive has just gotten whacked as a whole because everyone's like, no, sell the sector. It's no, like there's a reason why Walmart doesn't usually trade at 35 times forward earnings is because that's insane. And I think part of this is just you're going through a correction on this front. The other piece when it relates to, so we got a few things. Banks are absolutely screaming recession right now. No doubt about it. Some of the other stuff that's getting hit, like Walmart and Costco, is just like, hey,
valuations
you got overvalued,
Yep.
and like when the levee breaks, like you move on. The Mag 7 stuff is concerning to me, not because of recession, but it's been dominated by a bunch of foreign capital flows coming into the U.S. where, hey, there's been all these dollars that went overseas because of imports from overseas, and instead of going out and buying real estate in Manhattan, the money's been coming back in and buying Mag 7 stocks. And when those flows stop, there's a real problem for those companies because a lot of them trade at pretty crazy valuations too. The growth is there in a lot of cases, but not all of them. Apple's growing revenue 3% year over year. Tesla might not have any growth this year. That's what their CFO said. NVIDIA, sure, you're growing a ton. Meta, you're growing a ton. Microsoft, okay, you're growing like low double digits. So there's some stuff there that's dodgy. And so I think part of it is, you get these big narratives that pop up in markets, but if you actually look at what's going on, I think there are 3 or 4 different stories that this market is telling you right now, and only one of them is, hey, this could be because of recession. Let's take a quick break. When we come back, we got Wall Street Watch after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. You know, typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up, because we have something better.
Stronger, more powerful.
We have
each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Coming off a losing week where the S&P 500 sunk 3.1% overall, markets today are extending their losses as investors wave recession fears and ready for a new batch of economic data points this week, including a CPI inflation reading on Wednesday. Right now, the Dow down by 1% or 424 points. S&P 500 selling off by 2% or 116 points. And the tech-heavy NASDAQ plunging over 3% now or 584 points. Russell 2000 is down 1 7/10%. 10-year Treasury yield, down by 10 basis points at 4.21%, and crude oil down by 0.75%, trading at $66.54 a barrel. Several bank stocks, including J.P. Morgan Chase, Bank of America, and Citigroup, are seeing losses on the day as worries over a possible economic slowdown weigh on them. Meanwhile, Tesla shares down another 8% today, are now down over 35% so far this year. NVIDIA shares down nearly 4%, bringing its total pullback this year to over 16%. And Palantir shares down another 7%, bringing its total losses this year to more than 27%. Elsewhere, Robinhood agreed to pay nearly $30 million to settle an investigation by the Financial Industry Regulatory Authority into a range of violations. Robinhood down by 14% on the day. Novo Nordisk shares down by 8% after trial results for its weight loss drug, CagriSema, showed the treatment yielded a smaller impact for patients than previous tests. DoorDash will officially join the S&P 500 on March 24th, sending shares in the food delivery company actually down now by 3%. Redfin surging by 72% after the real estate brokerage firm announced plans to be acquired by Rocket Companies in a $1.75 billion all-stock deal expected to close in the second or third quarter of this year. And cloud software company Oracle will report their earnings after today's closing bell. I'm Tucker Silva, and that's Wall Street Watch.
Mike, you mentioned earlier you had a merger or a deal that you wanted to talk about.
That was it, the Rocket Redfin deal. Interesting to me.
Something else.
No,
talk to me a little bit about that one.
Well, Redfin, major platform. Remember that they're not just a tech platform like Zillow, for instance. Tech platform, then they sell different leads and advertising to different agents across the nation. Redfin has their own employee agents, from what I understand, and I don't know how big that business is. It looks like about 2,200 agents across the country, so clearly not a massive brokerage, but very much one of the dominant, I think, two online real estate venues to go take a look at. And so, I think an acquisition by a big mortgage, I don't think Rocket actually originates mortgages. Maybe they do, but
they do
originate as well. Yeah,
I don't know that they carry any. I don't know if they I believe they might just be an originator. I don't know if they hold any inventory.
In any case, teaming those two up so that you have this default and very easy to use, because I think that's Rocket's main appeal is sign on, we'll get you a pre-approval letter in 15 minutes. And if you have that integration right alongside Redfin, I can see how that might be valuable, especially if you are of the opinion that rates might be dropping in the near future. But Redfin itself has never really been able to, I think, fully execute on some of their vision. They came out there and made a big splash by discounting commissions. And, frankly, it's not like I see Redfin for sale signs all across the country on a frequent basis. You see them here and there, but it's not like they've made a huge dent in the industry or brought down prices, I think, in the way they were hoping to.
Yeah, I think that's a fair statement. Anything else that you want to talk about? We got a piece where Treasury Secretary Scott Bessent talking about, hey, there could be some economic pain coming as well. I think we kind of covered most of that.
Yeah, I don't want to beat this to death. Many people within the Trump administration are going in eyes wide open that when you attempt to rein in government spending and, take in these frankly outlandish deficits that we've been seeing over the course of the last few years, that it can lead to unforeseen consequences, one of which could be recession. And they're not really denying any of that because it would be tough to do so. The promise on the other side is that, hey, this public spending might get replaced by private spending because we are going to attract investment by making the United States the most compelling place to invest in the world. Jury's out on that one.
One other thing that I do want to talk about just when it comes to the market and trying to get a read on, again, more the market than the economy and whether the market is saying anything about recession. I mentioned financials, and generally when we talk about financials and think about them, what most people are thinking about is
J.P. Morgan Chase.
J.P. Morgan.
Yeah.
Bank of America. Yeah. Goldman Sachs. Wells Fargo. Like, what are those companies telling us? There's another part of the market, though, that is quite honestly completely melting down right now. And anyone who listens to the show knows that I generally am not someone who, gets all excited about things and uses terms like that frequently. But you do have one that is happening right now, and specifically looking at some of these alternative asset managers. And for those of you not familiar with them, an alternative asset manager is basically someone who manages something other than traditional publicly traded equities or publicly traded bonds.
Massive growth area over the last 15 years as banks have largely been forced to exit the area of smaller size financing and things along those lines, or if not exit, then hands tied in terms of what they are able to do there. Private credit has come to dominate and makes up massive portions of insurance companies' businesses in terms of their assets, private equity funds, pensions, endowments, all sorts of things like that. Have a lot of exposure to this area.
So you get a bunch of these that end up being big enough that they're publicly traded and they're in the S&P 500. Some of them, their names might be familiar to you. Apollo Global Management, Blackstone, KKR, Colbert Kravis and Roberts. Others you might not be as familiar with. You might not have ever heard of Blue Owl Capital. You might not have ever heard of Ares Management Corporation. But these are the big names in this space. And what has happened now, basically in the last 5 weeks, this is since the end of January, is the 5 companies that I just mentioned, which are really the biggest ones playing in this space. They run the huge growth in their business in the last couple of years has been through something called private credit. And private credit is a really wide, it's a big term for something. It's kind of like if you tell someone that you have mammals at your house, that could mean a lot of things. Private credit is kind of like that, in that it's not one specific thing. It could be direct lending, where Blackstone takes in $200 million and lends it all to one company. It could be something where there's a bunch of debt that's out there and Blackstone buys it all and consolidates it, and then it's no longer being traded publicly. There's all kinds of different flavors that you can have. It can be for companies. It can be for real estate. All kinds of different things. I've seen private credit businesses that lend for jewelry inventory. Okay, again, anything you can think of, it's in there. But regardless of it, all of these companies are big in that space. Here's how far all of these companies are off their 52-week highs right now, and this has pretty much all happened in the last 4 weeks. Blue Owl is down 30.8% from its highs. Apollo is down 30.41. Ares down 27. Blackstone down 29. KKR down 36. So all these companies that focus on that space are down about a third. And the interesting piece to me isn't just that they're down a third, but one of the places that investors look to see how risk is being handled by the financial system is in the credit markets to see, hey, is it becoming more expensive for companies in general, but in particular for bad companies with bad debt situations to manage their way through? And we've seen a little bit of a widening of credit spreads in publicly traded markets, but nothing huge, nothing notable. But these companies that operate in the private credit space have been, again, a 30% drawdown in 5 weeks qualifies as a meltdown in my book, Michael. It's hard to call it anything other than that. And so part of the problem here is there's a theory out there that a lot of the companies that are really bad credit risks have been going to the private credit markets rather than publicly issuing bonds. And so you might not have a great signal anymore from public credit markets as to how bad things are, because all the really bad stuff might not be publicly traded anymore. It might be privately held.
Yeah, we used to look at like the spread between junk and treasury, and that's what you're talking about. Hey, is there's a whole bunch of debt out there that we don't even qualify as junk because there's nobody rating it because it's held by private credit. Is
you don't need to rate a private like if I make a loan to you, Mike, directly, I don't need to go out and have, Moody's or Fitch or Standard & Poor's rate it.
No.
I just
because I'm not selling it on public markets.
I just go and do it. Like, I'm not trying to sell it to anyone, or at least on public markets. And this is. Here's the other part of this. So, and again, my antenna have been up about this for the last year or so because I see so many emails and pitches about private credit this and private credit that. And in particular, in the last year or so, it's been starting to push more towards the average retail investor under the guise of, hey, we want to democratize access to these products. And listen, it's all well and good if you want to democratize access to products, but generally, there's a reason why big companies don't like to sell expensive investment products to retail investors. There's actually a few different reasons. The first is it's really inefficient. They'd rather, get $100 million client than $1,000 $100,000 clients. It's just like they don't want to be dealing with all that administrative stuff. The second piece is, hey, if their job is, managing money, and there's some kind of an elitist thing to it, in that, hey, come to us because this is how you get access. Like, you don't want to offer it to everyone, otherwise, why would anyone want it? The fact that it's being offered to so many more people now is kind of like, okay, are you just trying to dump this on retail as, the musical chairs are ending? It kind of has that feel to it to a certain extent. So there's a lot out there that you wonder about. And the fact that these companies that specialize in this alternative asset management are at the front lines for what's getting beaten up in the last, 4 weeks or so might be a signal here. Like there's something going on there that you just kind of perk up your ears at and you go, oh, I need to pay attention there. I don't even know how we got on this topic.
Me either, but we got to take a break.
We do. So let's take a break. When we come back, let's do a little bit of Fed talk when we return.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Services. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in know their law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
All right, let's do a quick market update here. We've got the Dow off 407 points, about 1% right now. The S&P down 117 points, about 2%. The NASDAQ taking it the hardest, down about 621 points, 3.4% right now on the NASDAQ. 10-year U.S. Treasury moving 11 basis points down to 4.207%, so you got bonds getting bid up. Oil down 34 cents a barrel on West Texas Intermediate to 66.69. And we've got gold down $2.09 per ounce to 29.12 even. So overall, you've got a pretty steep sell-off in equity markets. Energy and gold not really moving anywhere, and you got bonds seeing some inflows there. So certainly some nervousness and skittishness in markets. And big thing is, hey, when you look at where this market actually stands right now, a lot of times we kind of poo-poo and we're like, well, this market hasn't really moved, too much or anything. And to be fair, this is still regular, normal market action. You typically see a 10% correction in the S&P 500. Anywhere from every 12 to 24 months, depending on exactly how the market moves. Where we stand right now with where the S&P 500 currently is, it is now down about 8.6% from its high. So we have kind of broken out to the low end from the trading range that we had been in since Election Day. The day before the election, the S&P closed at 57.82, and it really had not spent any time below that until the last couple days. We're now sitting at, almost 2% below. So today's action really pushing us there. So if we close below and then stay down there for a little bit, this is kind of the first real extension to the downside that we've seen. It still is something where, hey, the S&P 500 is where it was back in last July. So, yeah, it's given up, 8-9 months of gains at this point. But obviously, market's a little nervous, and certainly something where individuals, I can understand some nervousness out there if you're wondering, how does this end up moving from here?
Yeah, because, look, nobody has any guarantee that this is going to go one direction or another from here. Could continue down, very frequently, historically has, but nobody actually knows, and certainly nobody knows what the next policy outcome from the White House is going to be. But I can certainly understand how investors would be starting to get nervous now. You've wiped out a few months of gains pretty quickly, especially in some of those high-flying companies that have really made people money over the last few years. Here is the one question question that I would be asking myself as an investor. And it's really a question you should be asking yourself at any point in time. But how was I prepared for a potential market downturn and recession going into 2025? Like, what specific parts of my portfolio had me prepared for that potential outcome? And what was my game plan going into this year in the event of one? And if you can answer that question in like 3 sentences or less, then I'm not sure there's really much that you need to be doing. But if you can't, like, just honestly, if you can't answer that question when looking at your investment portfolio and your retirement future and trying to sort those things out, if you can't honestly assess that and say, here is where I am prepared for that potential outcome, here are the steps that I took ahead of time, then I think you'd need a second opinion. And if you would like one of those no commitment, just second opinions on what it is that you are doing today, the potential upsides and downsides and risks that you have when you approach your own portfolio, please give the folks at Armstrong Advisory Group a call. We'd be happy to offer one of those. The phone number is 800-393-4001. I know that markets like this can be nerve-wracking. If you have questions about how you are prepared for it, call us at 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, let's talk a little bit. Actually, I just want to briefly hop forward to one story here in terms of, Mike, when's the last time we even saw a piece published in any publication talking about dividends?
Mid-2010s?
It's been a while, right?
Yeah.
Like,
Wow.
A, yields are higher, and B, stock performance has been good the last few years. 2022 obviously was a hiccup, but I don't think anyone was like sitting there like, hey, dividends in 2022.
Right. Why am I obsessed with dividends when I can get 4% on a bond and tech stocks are going up by 30% a year?
But interesting point here where this piece from the Wall Street Journal that, hey, dividend stocks are dramatically, or at least the dividend indices are dramatically outperforming their non-dividend counterparts. Standard & Poor's for the S&P 500 has a sub-like index called the Dividend Aristocrats. It's companies that have raised their dividends in each of the past 25 years. That index up about 3.5%, while the S&P 500 again, this is when it was published, down a couple percentage points on the course of the year. So don't know if this is, investors specifically seeking out dividends or more just, hey, those are the companies that aren't as overvalued and that's where they're flocking to right now. But a little bit of noise that we haven't heard on that front in recent years. Quick break. Hour 2 of the Financial Exchange is coming right up.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Life estates are complicated, and they can cause problems if you're using them to protect your assets from the nursing home. Don't risk losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. affiliated.
This is Michael Valila, adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans in their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Kicking off hour two here, we got an ugly day developing on Wall Street where the Dow is off 341 points. That's actually less than 1%, so not much going on there. S&P's down 2%, 119 points, and the NASDAQ now down almost 4%, 678 points out the window here as the NASDAQ continues its struggles to start 2025. You take a look at where we sit right now, and this is not total return, so it's not factoring in dividends, but the NASDAQ now off 9% on the year so far, the S&P off 4%, and the Dow down 0.4%. So in what is, again, kind of a major reversal of what we've seen, in recent history, the NASDAQ really leading the way down here to kick things off for 2025 thus far in equity markets.
Money moving into bonds today. You've got the yield on the 10-year Treasury down to 4.209%. That's a 10 basis point move on the day. So certainly not an inflation trade, right? Like in previous types of sell-offs, you sometimes see both equities and bonds selling off. That's not what we're dealing with today. We are dealing with a recession and valuation concern trade. Seems to be the story of the day.
We got oil off 56 cents a barrel to 66.47. AAA national average for gas prices is at 308 and 0.9 cents. Remember, as part of the tariff negotiations last week, the United States did exempt USMCA compliant goods from tariffs as they were implemented. Energy exports generally fall into that category, which is why in the Northeast you are not seeing any upward movement in gas prices simply because those are now exempted. Instead, you're actually seeing movement in the opposite direction, where Massachusetts now below $3 a gallon.
Wahoo!
By the way, for Massachusetts and New Hampshire, actually, both below $3 a gallon, according to data from AAA. So there's some good news on that front that has developed there.
The average 30-year fixed-rate mortgage going now for 6.79%. I expect that to come down a little bit more with today's yield moves on the 10-year as well.
Did you say it was 6.79?
Correct.
Okay,
according to
yes.
Mortgage News Daily.
Yeah, maybe you get somewhere in the 6.6 range, 6.5 or something like that. And you got gold basically flat up 70 cents an ounce to $29.15.
Makes for a very interesting entrance to the spring housing season, which is well underway across the nation. We're seeing that in certain markets where inventory is upticking. But, yeah, definitely makes for an interesting one. If you start seeing those rates come down a bit, do you start to see more activity? We will see.
Mike, let's talk a little bit about daylight saving time. Just because...
It just happened?
Gosh, it just happened. And, yeah, daylight saving time, as opposed to what most people think, the summer is actually when we go to daylight saving time. Standard time is what we are on in the winter and fall. It's one of those things with clocks and time that everyone tends to get backwards. Kind of like people are like, well, the days get shorter in the winter. And it's like, no, they actually get longer. They get shorter in the summer and the fall heading into winter, but that's neither here nor there. In any case, there's this push that's out there to do away with the spring forward, fall back, and just make one of them permanent. The one that most people talk about making permanent is daylight saving time. What are the pros and cons that are discussed as it relates to this, Mike?
Well, the founding reason for it had to do with energy savings, and the idea here being that, hey, if I am awake for more sunlight hours, I don't need to turn on the lights necessarily. I might not need to heat my home if I am staying in bed during mainly nighttime hours. All sorts of energy cost savings that are still being debated to this point as to whether or not there's any there. But that was part of the argument in the for camp. Some of the other stuff just seems to be, frankly, it seems to be a lot of preference. But, arguments against, say, kids getting on the bus when it's dark out, safety issues there, and things along those lines seem to be part of the argument for the permanent change in one direction or another.
Ultimately, you look at all of this, and the one thing that you can't do is there's no way to legislate more daylight in.
No, it doesn't work.
It's caused by the Earth being round. Okay? And so unless you want to actually make the Earth flat, which has a whole bunch of logistical challenges.
Not according to a whole bunch of people.
Yes, if you're on Flat Earth Twitter, then fine. But to those of us that believe the Earth is round, sorry, but this is kind of a problem here. So you can't actually make more or less daylight. You just choose when it is, and so
there are positives and negatives to both sides of this argument. I'm personally in favor of permanent daylight saving time, but whatever.
So some really interesting things about this, actually. The first is, do you know that we didn't even have time zones until about 150 years ago?
Yeah.
The reason why is that it took so long to travel any meaningful distance that everyone just kept local time based on where the sun was, because you had no way of going even from Boston to New York in a day. There was no way to do it.
Then the train came around.
Until the advent of railroad. And then all of a sudden, okay, you could start to do things like that. And then, you could start to say, okay, now even, in a day I can go from New York to Chicago. And that is when time zones had to become standardized, because it now became a problem that, oh, gee, the sun's in a different place in the sky when I get there relative to, when I left, in terms of, how much of the day has elapsed. And so this is a relatively new thing that we're dealing with. And until the 1860s, it was basically every town had its own time that it kept, and that was just how they did it because you couldn't go very far.
Didn't really matter, yeah.
No, like, even like you're traveling by horseback, it's like, okay, how far are you really going to get in a day? The horse needs to rest. It can't just go forever, you know? So this is something where we don't have any perfect solution to any of this. And just as an example, if you went to, full daylight savings time, you end up with the cities and states in the far western part of the time zone that basically don't see sunlight until midway through the morning. If you're looking at like the Upper Peninsula of Michigan, which is still the eastern half of the Upper Peninsula is still on the eastern time zone, the sun wouldn't come up until like 9:15 in the winter.
Bit of a problem.
Again, I'm not like, even beyond like, hey, kids getting ready for school, I don't want to be awake for 3 hours before, like, and the obvious answer is, well, move away from the Upper Peninsula. And it's like, well, what if that's someone's home? Like, so there's no great answer on any of this, other than here's where I think I've gotten to, Mike. We need more time zones.
Go the Indian route of 15-minute time zones?
Half hour. Like, we don't need that many. I don't need the United States to have, like, 16 different time zones, but maybe 8 instead of 4. You know, like, that gets you somewhere, at least, I think.
I'd be really confused if I got to Indiana and suddenly it was, 10:45 instead of 11:15.
Well, that's just because you're not used to it.
True. I'd get used to it.
It's like, ultimately, human beings can get used to a lot of things.
Yeah.
But I'm also convinced, the more that I've thought about this, which, again, this is what convinced me, this is not an issue worth spending any time on. And unfortunately, we've just devoted 10 minutes of our show to it.
Yeah.
Because, again, the aggregate amount of daylight will not change. All we're doing is shuffling the deck chairs on the Earth.
What if we installed some mirrors?
Either mirrors, or we need to make... You ever go to the Museum of Science, Mike?
Yes.
Big dinosaurs?
The penny squisher.
Just flatten the Earth a bit.
You got to make a big one of those for the Earth, and just flatten the Earth, and then we can have the right amount of sunlight according to like how much we'd want. But absent the giant penny squisher, I don't think it's going to happen.
All right, so we're good on daylight saving time talk until 8 months from now.
Correct.
Yep, we'll revisit in the fall.
Great, sounds good.
Take a quick break here. When we come back, we've got trivia right after this.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. By making a donation, you can support the Veteran Advancement Program, which offers permanent and transitional affordable housing to veterans and their dependents. The DAV of Massachusetts is the only DAV department in the country to lead a veterans housing initiative for single vets and those with families. Visit DAV5K.Boston to make a donation today, and make note for this year's 5K to be held on Saturday, November 8th. That's DAV5K.Boston. Time for trivia here on the Financial Exchange, and today is John Hamm's 54th birthday. Hamm rose to fame in 2007 when he claimed the starring role on AMC's Mad Men. Hamm won the Golden Globe for Best Actor in a Drama for his role in Mad Men in 2008. Trivia question today: what was John Hamm's character's name in Mad Men? Once again, what was John Hamm's character's name in Mad Men? Be the 9th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the 9th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we got a piece in the Journal of Wall Street. It's titled, What the Dot-Com Bust Can Tell Us About Today's AI Boom. What can it tell us, Mike?
Maybe nothing. I think I would like to start off with and offer the perspective that quite possibly it can tell us very little. But we've not the first ones to bring up some, I don't know, corollaries or similarities seemingly between stages of the dot-com boom and what we've been seeing in the AI trade. I think a few lessons from the dot-com boom that I think everyone can kind of take away and learn from is that, yeah, sometimes valuations and bubbles do happen and people fundamentally start buying into things that they do not even begin to understand, as was the case during the dot-com bubble when you had companies that did not have any revenue skyrocketing in value because there was a .com next to their name. And you can, I think all of us can see how some of that stuff still exists here in markets today, right? Like, does the average person have a real sense for how crypto might or might not be related to AI, or how certain areas of AI are actually making money or making advancements? I think the answer is probably not. The other lessons that I would have would be these two aren't one-for-one similar, right? I just mentioned how in the dot-com bubble, you had companies that were making no money, had no revenues that were going through the roof. That's pretty fundamentally different from what we are dealing with when it comes to the AI boom, in my view. NVIDIA is one of the most profitable and fastest growing companies in history.
So, to that, and not to be, actually no, to be Debbie Downer.
Yep.
It wasn't just the unprofitable companies that went through the tech bubble.
True.
I'm looking right now at a chart of 5 major companies that I would imagine I've got 6 here, I think. But maybe only 5 of them were around. Oh, yeah, because that one didn't really exist then. Okay, so I got 5 that were, around and prevalent then. They were all at different stages. But I've got Microsoft, who was big enough to have already gone through an antitrust situation at that point. So there was a business there that was making money in monopolistic fashion. Amazon, who was not, a startup at that point, but, 4 or 5 years into their business and still, trying to figure out how to make money, but, not a brand new company with no revenue.
True.
Cisco Systems, who was, I believe, if I'm not mistaken, the first $1 trillion company ever.
Mm-hmm.
Intel Corporation, who was the 8 trillion pound gorilla in the room when it came to semiconductors. And eBay, another little scrappy young startup. And here's what you found from these companies. Let's start first with the scrappiest and the startupiest of the two, or of the 5. Amazon, from peak to trough, you look at how bad things got for Amazon. Amazon at one point was 95% off its tech bubble high in late 2001. So, again, you would expect that to a certain extent because valuations were nuts and Amazon was not this big, well-established company. Totally get it, right?
Yep.
There's nothing there when you sit there, you're like, okay, yeah, this is out of character. eBay was down 77% at one point off its tech bubble high. Again, scrappy young startup, sure, totally understand. Cisco Systems, stodgy, boring old Cisco Systems today. Back then, remember, Cisco was still making, billions of dollars in sales, and I don't have the exact profit numbers, but they were making a lot of money because they were really the only game in town at scale that did that stuff. Cisco Systems, by October of 2002, was 89% off its high. Intel, who was the then equivalent of NVIDIA in every respect, was down 80% off its high by October of 2002. And Microsoft, who was big enough that they went through, again, an antitrust, case and everything, by December of 2000 was 51% off its high. So even your big tech companies that were hugely profitable, might I add, you take a look at, these companies and their profit, and, I'll just look at margins as an example. Let's just do operating margins here. No, I'm not looking at the right thing. I can't pull it up in real time. But these were, companies that were bigly profitable. And they still felt a ton of pain just because the valuations had gotten so nutty. And in particular, the valuations got nutty, and then the businesses slowed down as the tech bubble burst.
Yeah, I think that's the lesson to me, was that even good companies, as happens in every big market pullback, but even big, good companies that survived and became behemoths later on, Amazon, got absolutely decimated during the dot-com bubble and bust.
Mike, do you know-
and that's an important lesson, I think, is, just because a company is profitable doesn't mean that they can't get dragged into a messy period of time.
Mike, do you know which of those companies got back to their dot-com bubble highs fastest?
Microsoft?
No. eBay. eBay made new highs in by, let's see what this is. By January of 2004, eBay was making new highs. The next one, do you think it's Microsoft? It's not. It was Amazon. Amazon was making new highs by November of 2009.
I guess that speaks to two companies that truly grew out of the dot-com bubble afterwards, right? Like I remember their prevalence back then. You know, Microsoft was just kind of doing more of the same by then. Those were two completely transformed companies.
Microsoft did not get back to its dot-com bubble highs until 2016. Because remember, the Steve Ballmer era sucked for Microsoft shareholders. I mean, my goodness, like just horrible. Intel and Cisco have never gotten back to those dot-com bubble highs. They are still the closest Intel has gotten is basically, let's see. I need to pull this up now just to see. I got to get up to current day just because I wasn't there. Intel is now 73% off its highs. It got as close as within 10% of them in 2020. And let's see, Cisco got to within about 20%, basically where they are right now. Obviously, there's dividends and things like that have been paid in the time, but just from a pure price level, kind of wild. Quick break here. When we come back, we've got the trivia answer after this.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. Their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates are not simple documents and can create the potential for you to lose control of your estate. So if you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th, 2025. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Managing money can be overwhelming. Investments, retirement, taxes, where do you even start? This is Susan Powers, and today I'm joined by Michael Armstrong, co-host of the Financial Exchange and the president of Armstrong Advisory Group, to break it down. First question, Mike. What's the biggest reason someone should work with a financial advisor?
Yeah, it's a fair question. Like, a financial advisor can help you set and reach financial goals, whether that's saving for retirement, buying a home, protecting your estate. They can create personalized strategies that align with your income and expenses and risk tolerance. Plus, financial planning just isn't one and done. Typically you'll adjust your plan as life changes. And so having somebody that's knowledgeable alongside there that can guide you through those different stages of life is really important.
Well, that makes a lot of sense. Now, what about people who think that they can manage their finances and investments on their own? What do they miss out on?
Look, I'm not blind to this. Some people can, and it requires a bit of an honest self-assessment. But if you're not looking at key factors like tax strategies, investment risk, long-term planning, those are areas where financial advisors can really help to come in, maximize returns while keeping an eye on risk-adjusted returns, optimizing asset allocation, and just minimizing those unnecessary risks that we see so frequently taken by folks. So there can be a place for one in people's lives, but it's not a one for everybody.
If you want professional financial guidance, reach out to the Armstrong Advisory Group today to request your free copy of our new guide, What Can a Financial Advisor Do for Me? Call 800-393-4001 to start securing your financial future. That number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, trivia questions today was, what was John Hamm's character's name in Mad Men? That would be Don Draper. Bobby from Bourne, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Bobby, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
What was our percentage of wrong answers on that one? That's got to be a near all-time low of wrong answers.
Yeah, pretty easy question.
Yeah.
Well, here's if you want the tougher one. What was Don Draper's real name?
Yep.
In Mad Men. Any guesses, Mike?
I looked it up earlier.
I never watched the show. Don't know.
Dick Whitman.
Yeah.
So, spoiler alert. Sorry.
I literally
15 years to watch it.
Nothing about the show.
Yeah.
I disagree. I think it's a huge plot line.
Wasn't that episode 1, though, that we found that out? Or was that the end?
It was the first season. Like the first season
yeah.
basically wrapped up that storyline.
Okay.
But it was a big one for the first season. Who is Don Draper? You know? Speaking of which, how the AI talent race is reshaping the tech job market.
Those two are not related.
They can be.
Yeah,
you know, Don wasn't a real person, and AI's not a real person
Sure.
either. You just got to stretch your mind a little bit, Michael.
Yeah, man.
When we talk about this, is this talking about like companies not hiring as many people, or is it more we're looking for people with different skills listed in their resumes?
Different skills, and I'll be interested to see how they're actually testing these skills, because it's pretty easy to say that you're some sort of black belt in ChatGPT without anything backing it. But I think eventually, and I'm sure already, you start having college-level courses and credentials that are popping up there that you can go and get. And tech will certainly be the very first part of the industry. But frankly, I think almost every industry, whether there's a good reason for it or not, are trying to make their business all about AI. And so I think across the spectrum, I would expect that any college graduate right now is being told by counselors, find a way to have AI somewhere in your resume. And I don't care if you are applying for a food services job or for a investment banking role or something in technology, you need to have it there somewhere.
Interesting note on that. Mike, what would you say when you look at millennials in terms of their ability to use technology, remember, not every young person is a millennial to everyone listening. Millennials are a specific cohort of people that at this point in time are between like 30 and 45 years old. The younger people now, they're Gen Z. But in terms of millennials who were coming into the job market during the 2000s and early 2010s, what do you think is like the defining tech skill that they have that separates them from previous generations? I'll give my answer while you think.
I think it's just navigating the internet. Like,
So
and
you're
knowing
right
how to
there with
search
me.
for things.
It's search.
Yeah.
It's search.
Yeah.
Like being able to understand how a keyword search works, where my parents, as much as I love them, the stuff that they put into Google, you're not going to get good results.
Yeah.
Like, it's just, you can't put into Google, buying a car if you want to buy a car. You have to put in, like, hey, car dealers with this brand in New England or whatever, or, how do I negotiate a new car lease? Like, and millennials picked up on that because we grew up when search engines grew up. So
the other piece that I would say, I feel like that was the first generation to get hired to do social media. So navigating that in the professional space, whether it was LinkedIn or Instagram, Facebook, all of those platforms, they were the first.
Even that
cohort
boils
to get
down
hired
to
for
search
that.
because it's knowing how to like get your stuff to show up, basically.
Yeah, exactly.
Mike, would you ever, in a million years, have considered putting Google as a relevant skill on your resume?
No.
15 years ago.
No, I don't know. Yeah, you're right. There was no way to advertise that. The most tech-forward thing I had on my resume at any point was that I had a Microsoft Excel certification course on my resume.
Right, or like how many resumes do you see like proficient with Microsoft Word, Excel, and PowerPoint?
Pretty
like,
much a standard. Yep.
But do you ever see anyone like good at Google?
No.
No, like so I think it's kind of interesting just how this, like, from a societal standpoint, what it's okay to put as a skill on a resume and what isn't, because arguably one of the biggest tech skills that millennials brought to the table never showed up on a resume, but one of the biggest ones that I suspect Gen Z will have is, again, they're developing at the same time that all of these AI programs are, and quite honestly, they're probably going to run circles around most millennials. I am fully calling myself a soon-to-be tech illiterate. I'm not proud of it, but like this is where I think we're going.
I don't know what that looks like. Proficient in ChatGPT and then several other like AI-based platforms would be, I guess, how it appears on a resume.
I think so.
Yeah.
I think so.
Yeah.
And so I think that this is just interesting, like what makes it onto a resume and what doesn't, because like it's really the funny thing is the cutoff for me is like anything that's native to the internet. Like Internet 1.0 or 2.0 or whatever number it was, like during the 2000s and 2010s, you basically wouldn't put it on a resume because it's just like learning how to find stuff. But anything that is housed somewhere else, we've said, yes, I'm good at Excel or I'm good at, COBOL or like, okay, those are fine, but good at Google you would never put on there. GPT, the interesting thing, and all these, platforms, they're all housed on the internet, but we're treating them differently, which is kind of interesting to me.
Yeah.
I suck at Excel. If you're looking for the perfect place for your next vacation, look no further than the U.S. Virgin Islands. Act fast and take advantage of a special promotion to St. Croix. Experience a vibe like no other and receive a $250 per person airfare credit and a free hotel night when you book a 5-night minimum stay with any participating hotel before June 30th. St. Croix is known for its incredible history and spectacular architecture, along with world-class cuisine, incredible golf courses, and a wide variety of water sports. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Voted one of the top 2025 Caribbean destinations by U.S. News and World Report, America's Caribbean Paradise is waiting for you. Experience a vibe like no other on the island of St. Croix. Go to visitusvi.com and use the code VIBE2025 for more information and book your trip today. That's visitusvi.com and code VIBE2025.
Mike, you ever been to a restaurant?
No, what's that?
It's on my resume.
Good at restaurant. Can be taken out in public. There's a piece in the New York Times, and it's talking about, hey, despite, the weather being a mess in many parts of the country, despite inflation concerns, this and that, restaurant sales have been a bright spot in the economic data over the course of the winter. And the thing that I find, I guess, most wild about this is, we spent a lot of 2022 and 2023 reading the pieces, inflation's making restaurants, unmanageable, this and that. We spent a lot of time, talking about how hard it is for restaurants to get help, which is still a major problem, by the way. Talk to any restaurant owner, and they will tell you that still is one of the biggest issues they have. But despite all of this, and this is according to data from the National Restaurant Association, January sales at eating and drinking places was up about 2 percentage points in real terms after adjusting for inflation.
Chuck, I'm filing this in my folder of other stories related to that wealth effect. The growing upper class. This is not a story about McDonald's and Chipotle.
No.
This is a story about luxury restaurants who are able to charge a high menu price and speaks to the massive increase in spending on luxury experiences that we've seen over the last year or so. And I'm filing it right away with that because you go take a look at McDonald's earnings, for example.
Sure.
They were fine, but they were not exactly expecting a blockbuster first quarter. In fact, they expect the first quarter of the year to be a low point for same-store sales, according to the CFO. And so this falls into that same category, which is why I'll also be really interested to see what we have to say about March restaurant sales or April restaurant sales, assuming this type of market downturn sticks with us and, on the surface, somebody with $5 million in their 401k sees a giant drop in the value of their assets. Do you start to see maybe that $5 million person isn't the best proxy, but $1 million in that 401k, which is a large portion of Americans, as we know, do they start to see that type of pullback away from the big, experience spending that has been driving a lot of this economy forward over the last several months?
You know what the comp is on this, in my opinion?
What's that?
It's what we're seeing with the airlines where your Deltas, your Uniteds, your Americans, the ones that offer the high-end premium seats, they've been just fine the last couple of years. Your JetBlues and Southwests and Frontiers and Spirits have been getting absolutely just, crushed.
Yep.
It's the same type of thing, and it really speaks to that high-end spender being the driving force behind a lot of spending growth, and the vast majority of people really struggling to the point where they can't find ways to make these discretionary purchases.
Which, again, gets back to how difficult these things are to predict. Let's just talk about, for 30 seconds, that airline piece. If you had told me in 2020 that airlines were preparing for a world in which the business traveler is doing a lot less travel because of the advent of Zoom and all of this stuff, and so first-class cabins were going to shrink. They wanted to make more room.
Not first class, Mike. They have a whole class called business class.
Right. All of those things were going to permanently shrink, and they needed to make more room for this cost-conscious vacation traveler. I would have totally bought that premise. Instead, the exact opposite has happened. Business travelers have returned in force, and the vacation traveler has been willing to pay up for luxury. It's been the exact opposite of, I think, what I probably would have personally anticipated in the early days of COVID. Granted, I did not anticipate quite as much stimulus and market runaway as we have seen over the last few years, but that's where this stuff becomes so difficult to tell where human behavior will go next.
Let's take a quick break here. When we return, it's time for Stack Roulette.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Developing the right financial strategy can be complicated, especially in today's economic climate. Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the most important pieces to this puzzle is the trust you have with the advisor you choose to work with. We've written a brand new guide called What Can an Advisor Do for Me? In it, we discuss a host of reasons why picking the right one can be critical to your peace of mind as you age. A financial advisor is much more than someone who simply manages your money. A financial advisor can help you understand the strengths and weaknesses of your portfolio, portfolio, the various changes you may need to make to achieve your goals, and the way you may be able to protect your assets as you enter your retirement years. Call us right now at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. A sound estate plan has many layers. In some cases, using a life estate can be a beneficial piece of your plan, but they also can be problematic. Call Cushing & Dolan, the experts in elder law, at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. So be aware of the many problems life estates can cause before you create one. Call Cushing & Dolan today at 866-848-5699 and request this new guide. In it, you'll learn about the significant effects that life estates can have on your estate plan, including the possibility of losing control of your estate. Call 866-848-5699 and get your free guide today. That's 866-848-5699. Or you can request the guide online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right, Mike, what do you got for me for Stack Roulette?
We have got CVS finally pivoting their business model a little bit, perhaps too little too late after Walgreens getting taken private last week. But both pharmacies struggling a lot over the course of the last 20 years, really, as a massive portion of their business, the front of store sales of grocery items, cleaning items, all sorts of convenience store items that you would typically go to have just disappeared to the likes of Amazon primarily. But CVS now testing out 12 new stores that are going to focus on full-service pharmacies, limited retail offerings, average size less than 5,000 square feet, which I don't know the average size of an existing CVS, but that's substantially smaller than your typical CVS store. And we'll see how it goes. I can't imagine this is going to be able to completely save and revolutionize their business, but I don't know about you, Chuck. I don't know the last time I have gone into a CVS specifically for anything other than medicine-type services. right? Like the only time
Yeah.
I ever enter one, even then, like, I might be traveling and need toothpaste, but I think that they would still carry that type of thing. What they're talking about getting rid of is the aisles upon aisles of greeting cards and everything else, and that's just, I think, not how a lot of people shop these days.
Yeah, it does actually raise an interesting question just on the greeting cards. Like, if they stop stocking those, what happens to Hallmark? Where do those cards go? I mean, I guess grocery stores is like
grocery stores,
stores,
Target, Walmart still carry
I get
them,
mine
but
at the paper store. You guys know the paper store?
I know the paper store. I've just never
they
been
got
in
plenty.
one.
Yeah, it's nice. They got plenty of cards, gifts, all that crap.
I should go there more often.
Yeah, it's fine.
Sounds nice.
Yeah.
But their overall push from CVS over the last few years has been more focused on healthcare, right? They stopped selling cigarettes. They still sell alcohol, but they dropped a bunch of stuff. They tried to expand their primary care, and while I have personally found that stuff very convenient, clearly the adoption's not been there, and also they've had some trouble with the assumed reimbursements they would be getting from drugs and from primary care compared to what they're actually receiving. But continuing this push, it seems like, away from retail and towards medicine, which to me is the only direction you can go if you are one of these pharmacy companies now.
Mike, I want to talk a little bit about the great avocado. And I didn't realize that the avocado's prevalence in American culture is a pretty new thing. The average American today eats about 9 pounds of avocados a year.
Okay.
So figure 3/4 of a pound a month, which is, what do you think that is, Mike? Maybe 2 avocados a month?
Sure.
That's the average. Obviously, I know there's
like one a week.
Tucker, I'm like 3 or 4. Again, I'm a heavy guacker these days, and it's wild. It's great. But in the 1970s, the average American ate less than 1 pound of avocados a year. So avocado consumption is up like 900% in the last 50 years. Even since 2000, it's quadrupled. And the big thing is that most of them now are not grown in the U.S., which is no surprise, but 79.7% of avocados are now grown, that are consumed in the U.S., are now grown in Mexico. This is according to data from the Haas Avocado Board, which, how do I get on that?
Not doing this.
What do you mean not doing this?
You're going to have to really go for a career change if you're going to get on the board, I think.
Doesn't my consumption, do anything?
I don't think so, Chuck.
You don't...
No.
I mean, it's...
No, I don't think so.
I figured it was the heaviest eaters end up on it or something.
At the very least, a career in agriculture might be a prerequisite. But what do you say, 10 pounds a year is the average?
9.
9? Because the average American also consumes 60 pounds of beef. So not surprising,
on the beef.
but that's kind of shrinks. And I'm sure chicken's got to be like 100 pounds per person on average. So, yeah.
But the wild thing is that avocados, until the late 90s, the big thing that spurred this is foreign avocados, like big U.S. avocado, prevented the imports of avocados for the longest time. It was only in 97 that Mexican avocados were allowed into the United States and basically weren't accessible in the U.S. until around 10 years later. And now, again, 79.7% of avocados consumed in the U.S. are grown in Mexico. About 11.8% is in California. And then you got Peru and Colombia at 5 and 2.6% respectively. And that's pretty much everything. So it's kind of wild just how this is, all developed here. But there really is an inflection point when Mexican avocados became available in the U.S. just because that drove the cost down significantly, because otherwise, if you wanted to produce enough avocados to get our current level of consumption, the price would be just significantly higher.
It's amazing what low prices and good marketing can do.
And just delicious avocado.
Yeah,
there's no better marketing for avocado than eating an avocado. So there's that. Taking a look at markets, they still remain very not good at the moment. The Dow is off 471 points, the S&P is down 117, and the Nasdaq down 597. We're going to take a break for the rest of the day. Tomorrow, back at it. Remember, we do have the JOLTS report coming out tomorrow at 10 a.m. We'll be discussing that and a whole lot more on the Financial Exchange.